Did you know that the global green bond market is expected to cross $2 trillion in the next few years? Globe showing Europe Africa money bag imagine earning long-term profits while funding projects that fight climate change. That's exactly what green bonds are designed to do. In this video, you'll discover what green bonds actually are, how you can invest in them safely, and the long-term growth potential that could supercharge your portfolio. By the end, you'll know whether green bonds deserve a place in your investment strategy. Host, let's be honest. Everyone's talking about green investing, but most people don't know where to start. A friend of mine, let's call her Sarah, wanted to align her investments with her values. She wanted her money to fight climate change and grow over time. After months of research, she found the answer in green bonds. Today, I'll break it all down in plain language. No financial jargon. By the end of this video, you'll have a clear roadmap to start investing responsibly and profitably. Host, first, why are green bonds even a big deal? Seedling what they are, green bonds are like regular bonds, fixed income investments where you lend money to a company or government. But here's the twist. The money is earmarked for environmentally friendly projects, like renewable energy, clean transportation, or sustainable agriculture. Chart increasing growth story. The concept started in 2007 when the European Investment Bank issued the first climate awareness bond. By 2015, annual issuance hit over $40 billion, and in 2023, it crossed $500 billion globally. Globe showing Europe Africa global importance. With governments racing to meet the Paris Climate Agreement targets, green bonds have become a critical tool to finance the transition to a low-carbon economy. These aren't just good for the planet. They're shaping the future of global finance. Key idea 1. How green bonds work. Host. Think of a green bond like a traditional bond with a mission. Here's the basic flow. Issuer. A government, municipality, or corporation decides to fund an eco-friendly project. Investors. People like you buy the bond, lending them money. Impact. The funds go directly into green projects, wind farms, solar grids, water treatment facilities. Return. Over time, you receive interest payments and get your principal back at maturity. YTB checkmark case study. In 2022, Apple issued a $4.7 billion green bond to fund clean energy projects for its supply chain. Investors earned competitive yields while supporting global carbon reduction. It's investing for profit and purpose. Key idea 2. Why investors are interested. Host. AAP Sok Rahi Hong. Why not just buy a regular bond? Good question. Here's why green bonds stand out. Competitive returns. Yields often match traditional bonds of similar risk. Portfolio diversification. They open exposure to the booming sustainability sector. Government incentives. Some countries offer tax breaks or credits for green investments. Bar charts supporting data. According to the Climate Bonds Initiative, green bonds have seen double-digit annual growth rates for the last 5 years. Even billionaires like Bill Gates and major funds like BlackRock have backed sustainable finance as a key trend. So you're not just following a fad. You're part of a mega trend. Key idea 3. Pros and cons you must know. Host. Before you jump in, let's weigh the pros and cons. Pros. Environmentally positive impact. Long-term demand from governments and corporations. Strong ESG, environmental, social, governance, credentials. Cons. Greenwashing risk. Some issuers label projects green without strong verification. Liquidity. Certain green bonds may trade less frequently than mainstream bonds. Interest rate risk. Like any bond, prices fall when interest rates rise. Direct hit analogy. Think of green bonds like an electric car, eco-friendly and forward-thinking, but you must still check the battery, warranty, and resale value before buying. Host. What's next for green bonds? By 2030, analysts predict annual green bond issuance could top $5 trillion. But challenges remain. Regulatory standards need tightening to avoid greenwashing. Climate policies differ across countries. Global interest rate changes could affect bond pricing. Thinking phase: what if governments make carbon neutrality mandatory? Demand for green bonds could explode, making early investors big winners. Still, you must assess your risk appetite and stay informed. Host. To wrap up, green bonds offer you the chance to earn stable, long-term returns while funding projects that protect our planet. Remember these key takeaways. They work just like regular bonds, but fund eco-projects. Returns are competitive, and demand is only growing. Do your homework. Verify the project's green credentials before investing. Lightbulb: my memorable takeaway. Investing in the planet isn't just ethical, it can be profitable. If you enjoyed this breakdown of green bonds, hit like, subscribe for more smart finance insights, and comment below. Backhand index pointing right. Would you consider adding green bonds to your portfolio? Thanks for watching. And here's to investing in a greener future. Seedling money with wings.